Thank you so much, Bailey. It is such a pleasure to be here with you all today. And we are again talking about something I'm very passionate about, which is avoiding the classic conundrum businesses and business owners fall into, which is mixing your business and personal finances. It seems like such a simple concept, but I know from experience after connecting with many, many business owners at various networking events that this is something they didn't realize was so important. And they kind of wish somebody had let them know in the beginning, like you have to get them separated. So I'm really excited to be here today to present this and chat with everybody about staying out of trouble. So first and foremost, I want to give you all a bit of a story. So my husband and I, in 2016, we decided to start a business. It was a really exciting time for us. We had no idea where to start. And we didn't realize that separating your business and personal finances was one of the key things we should do. So we ended up doing what most business owners do, which is we opened a thriving business. It was doing great. We were just putting expenses on our credit cards and keeping everything mixed in, our groceries, plus our office needs. And then we came to tax season. Every business owner's worst nightmare. This is when our tax advisor sat us down and said, hey, you guys, I can't go through your business expenses and I can't help you with a lot of the actions and benefits that you receive as small business owners because your business finances and your personal finances are completely intermingled. I can't tell this apart. So I ended up with the very fun job of taking 8 months worth of finances, which was 8 months worth of bank statements across multiple accounts, and figuring out what was a business expense versus what was a personal expense. Now, it might sound kind of easy, but when you start thinking about like, okay, that trip to Walmart, did I buy something for the business and then did I also buy things for my house? It starts becoming a bit harder to differentiate. And yes, we saved a lot of our receipts, but we saved the receipts for the major purchases, not the $20, where we needed a stack of Post-its. And those were technically business expenses. So by my best estimate, that first year, we probably had somewhere between $5,000 to $10,000 of expenses that we couldn't totally justify as a business expense because we had mixed them in with our personal expenses. And there was no way for us to tell them apart or argue that they should be separated. So this is why I find it so important to start early on with understanding and separating your business and personal finances. Now, if you're in the case that most people find themselves in and you haven't done that, it's okay, but this story possibly resonates with you. There are ways to separate your finances now, and now is a great time to start. We are getting ready to close out the year, which means tax season's just around the corner. So you can even get ahead of the curve and start early on separating things if you have been intermingling them. And then there's some great ways and tools that I have available to chat with you about today to help that process be a little bit less of a challenge for you to work through. All right, so let's talk about the importance of why it's so significant to do this. It makes tax season a lot easier, not just for the accountant you're working with, or if you're doing your own accounting for you, but it also makes it easier for you in the long run. I probably spent an entire week's worth of working hours on top of the hours I was working for my business, just trying to get through all of those bank statements and get things in an order that I could give them to the accountant and clearly say this was personal versus business. So separating your taxes for personal and business will definitely make this easier in the long run. Also, your time is finite. As a business owner, there's no such thing as extra time. So taking the steps you can to make sure you don't have to give yourself extra work later is really important. Also, it's really hard to take advantage of the tax breaks and write-offs that are available for small business owners if you aren't super clear on what business expenses you've had throughout the year versus what your personal expenses were. So these are some of the very important reasons why it will make tax season earlier and will most likely save you quite a bit of money in the long run, because you will have a better idea of what was a bit personal expense versus a business expense. All right, like I said, don't lose money. There are great tax relief options out there. In fact, there is a huge list of all of the different types of deductions and benefits SMBs can get. Sometimes it depends on if you're in your first year of business. If you've been in business for a while, some of the deductions are the same no matter how long your business has been open. But it's really important that you find time to start understanding what's available for you out there and take advantage of them. You will save yourself money. If anybody is here that was a part of the Profit First webinar last month, you will also know that saving yourself money and all the ways possible is a huge part of your business. So staying on top of your bookkeeping literally can save you thousands. In fact, there's a pretty reasonable assessment out there that most small businesses miss out on several $1,000s worth of tax deductions yearly because they're not doing proper bookkeeping or accounting. Several $1,000s at the end of the day can be a big difference in terms of maybe what you need to purchase for your business's inventory, how much you're able to pay yourself at the end of the year. Maybe that goes towards employee bonuses. So being on top of your finances is really important. Right. So an example here, tax deductions. For a business that has $45,000 in income, and the tax rate is going to depend, but on average, you'll see a 19.8 tax rate. That's thinking about sole proprietorships that pay 13.3%, whereas small partnerships pay 23.6. So sort of in the middle at 19.8. Assuming this and that $5,000 tax deduction is what's available to you based on some of the expenses you've had, you're going to save $1,000. You can see the breakdown here that without the deductions, if your income was $50,000, multiply that, it would potentially result in $10,000 worth of taxes that you're going to need to pay. Whereas with deductions, it could result in $9,000 in savings. So over the course of a year, this can add up pretty considerably and very quickly. And this is just a quick example. This doesn't look at all available deductions that might be out there for you to take advantage of. Oops. My apologies. So major expenses that businesses can receive tax deductions on. These are just some of the top 5. There's lists out there. There's hundreds of tax deductions. Some of them are state dependent, some of them are federal. So it's really important that you are on top of knowing what deductions are available for you. But the most common ones we know of in the top 5 are business use of your vehicle. So this is really important, especially if you're considering that you run your business. That's business. Also, using your vehicle to go pick up for your business. If you have a retail store and you need to go pick up that amazing display counter that's in the next town over that another business is selling, then you might be using your vehicle to go get that. That is a business use of your vehicle. Licenses and fees. So this is going to be your business license. This also is going to account for software licenses, such as your point of sale system, your like any software use that support your business. Maybe you have a photography business and use Photoshop, that would be a software fee. Salaries and benefits are also a major area where you can receive tax deductions. Office supplies and expenses. This is one that always catches people by surprise. You have no idea how much you're going to spend on office supplies and expenses. That $5 pack of pens that you buy 3 times a year, it adds up. That's $15. The $50 reams of paper that you buy for the printer, those add up. So those office supplies definitely are a big one. And then furniture and equipment. A lot of furniture and equipment can often go into a business depending on what your business is doing. So keeping those separated and knowing what you've spent on them is important. Furniture and equipment is also a curious one because it will have a depreciation that occurs over time. So the first year that you own that furniture and equipment, it will have a higher tax deduction rate than the next year and the year after that. And this is something that you're really going to want to work with an accountant or a tax advisor on to understand what is available to you out there. The first year we were in business, I was shocked by how much of a deduction we were able to receive on our taxes for our furniture and equipment. So taking advantage of your deductions is very important and very helpful for your bookkeeping. All right. So how can you easily start separating? Maybe you're sitting here going like, yes, this all sounds great, but I've gotten myself in the dilemma that many of us find ourselves in, which is I never separated, or I separate some, but not others. So first and foremost, follow the flow chart. Have you made a business purchase? The answer is yes. Are these purchases done from a business specific account and or card? If the answer is yes, well done. You separated. Make sure you do that consistently. Keep it separated. You still have a little bit of work to do, but you're doing really good to start. Let's take the other route, the no's. Have you made business purchases? No. Great. You're going to be making those soon, and you can start right now getting ahead of the curve to make this process a lot easier for you. First thing you should do, go open a business account. And whatever purchases you make for your business come from that account. Whatever purchases you make personally come from your other personal accounts. Be really, really diligent. Even if it means at the checkout line, you are taking up 2 sections on that conveyor belt saying this is the business purchases and this is the personal. And then keep up with categorizing. If you are in the area where you have been making business purchases, but know you have not been separating, it's okay. This is the time to start. And you're going to have to do a little bit of extra work, but you're going to have to do this work no matter what. So you might as well start now. And we're going to start talking about categorizing as well, because categorizing is kind of the next key thing that comes into separating your finances. It's not just about providing your accountant with a list of the entire year's worth of transactions and saying, I know for certain that these were all business purchases and these were all personal. You're going to have to help them out a little bit more by categorizing these purchases into what they were, because depending on what they were for, your purchases have different tax deductions that are available to them. A classic example of this is meals and entertainment. Everybody, not everybody, many people I communicate with have the idea that a meal is a tax write-off. It is. If you are purchasing a meal for for yourself, a lunch, you can deduct that. However, it's not 100% deduction of that meal. It's 50%, especially in the case that you're just doing it for yourself. Now, if it's a business event, you are taking your entire team out for lunch, or you are hosting an event for partners to learn about your company, maybe it's a networking event. Those are 100% write-offs. So you have to be able to tell your accountant, was this meal a 50% or 100%? Because it does make a big difference. And you shouldn't fudge it, because that's how you get audited. It looks like we have a question here. What if your business account doesn't have enough to cover the purchases or payment? That's a great question. You need to take your funds, if you're funding from your personal money, take your funds from your personal account, put them into your business account, because at the end of at tax season, you're also going to have to answer the question, how much did you invest into the startup costs of your business? And that's really, really crucial for how your accountant works through various elements of your taxes and how they're submitted. For 2022, I heard that all meals were 100%. Is that incorrect? That's going to be a great question for your tax advisor. Per historical, like everything through, I think, 2015 on, it was 50% for some, 100% for others. Your tax advisor or accountant is going to have the most up-to-date information in regards to what counts there. I'm just going off of what I know as the standard for those. It may have changed this year though. Okay. So a couple things you can do to get to start categorizing. Knowing what you can count in your categories is a very good one. This is going to be a really good time for us to take a look at the Novo business versus personal expense separation tool that we actually created and have available for everybody to utilize. So I'm going to bring this over so you all can see this. Okay. This is a tool that we designed for you all to make the process of separating your expenses and categorizing them a little bit easier. I have some of the predominant categories that most businesses put down for their businesses. What I would encourage you to do though is utilize Google. It's a great resource. Go and look at what business expenses are tax deductible and see which ones align with your business needs. When you start finding others that do align with your business needs, add them to this second section here. So let's say one of them is software fees. When you add in software fees, this is actually going to show up on the second tab, which is where you're going to start categorizing those expenses. And you're going to be able to go to your bank account, be it if it's a business account, a personal account, multiple accounts, and export the transactions from your account as a CSV file. Once you have that file, you can copy and paste the transactions into this tool here. And then you're going to be able to use these drop downs to categorize what each one of those transactions are. So you can see where I added software fees on the other page. Now it's one of the options in this drop down menu for you to use. So a great example of this would be, let's say that you went and purchased, let's say you found a fantastic display cabinet on Wayfair. And ideally, you're not typing this in, you'll just be copying and pasting your transactions in, but you'll want to say where the transaction was from, so the business, the date 4-1-22, we bought this in April, the amount $600, and then you're going to come over to your categories and find the correct category for it. I do not have furniture and fixtures as one of my categories yet, so I'm going to go ahead and add that in. Oops, my apologies. Go back to our second table. And now we can categorize that as furniture and fixtures. So when we deliver this to our accountant, they're going to go, oh my gosh, this is so helpful. Thank you so much. This is exactly what I needed to know. You might have also noticed that some of the other things that are pretty common for what you can categorize in a tax deduction is on here. That includes advertising, continued education. This is a huge one. Continued education is a fantastic thing for business owners, and that doesn't have to be college education. If you are paying a subscription fee for things like Scribed or Masterclass, you can count those subscription fees towards continued education as long as you're taking business related courses or courses that relate to what your business is. What counts as personal? So there is a category in here that says personal non-business expense. This is going to be in the classic case where you've mixed things up. So let's say you've got this huge laundry list of items here, and one of your personal expenses was Grocery store in my area is City Market. It's where I purchase all of my food from. And I spent $100 at City Market. That was not a business expense. That was just me buying food for myself, for my house. So I'm going to come in here and categorize that as personal non-business expense. I don't have to say what it was. It doesn't matter to the accountant. They just need to know that that was a personal expense so that when they're using this, they can filter it out. Now, some people may be using other systems like QuickBooks is a super common tool for accounting. This tool is best used if you're not currently using an accounting software and is designed for you to help separate things. Even when I was using an accounting software, it helped me to separate it out here and provide this to my accountant, but it's going to kind of depend on what your personal preferences are. Let's head back to our webinar or to our slides. So hopefully you'll be able to utilize this tool and it will be very resourceful for you. It's designed to be incredibly customizable and to really help you start getting the feeling of separating and categorizing. If you have another way to do it, that's fantastic. Quick question I see in here. Would it be better to use a personal card for food shopping? Yes, absolutely. Unless you are purchasing that food to bring to your business to provide to your employees, which could include yourself. So if it's like a snack room that you have, that would be a business expense. So the best way to think about it when you're standing at the checkout line is this going to my house to feed myself and my family, or to be for myself and my family? Or is this going to my business to be for the business and the employees? Just ask yourself that question. And it should be relatively black and white. If there's a gray area, I typically err on the side of making that personal because chances are if it's gray, it's going to be more personal. So we just took a look at the template. This is where you can scan the QR code. So I'll hold this up here for just a second for everybody to grab that template for your own use.